Good morning, good evening, good afternoon, traders. Welcome back to RN Isaac Gedinji FX. To our new subscribers, I would like us to welcome you officially to this great family, whereby we learn how to trade forex from the basic up to where we are going to be a profitable forex trader. To our returning subscribers, I want to thank you for your great support. And since we started this series, we have learned a lot. We started with the introduction to forex. We learned what is forex, the new terminologies that we are going to use. We went to second part 2, whereby we learn about the risk management. We talked about the time frame, different traders, and also we went ahead and introduced about the market structure. I showed you how bullish market structure look like. I showed you how bearish market structure look like, and even the range of consolidation market structure. We went even ahead to talk about the fractal of market structure, and yesterday we did about the setup, or the setup that I look when I'm in my micro time frame. So today I want us to do something different. I want us to apply what we have learned and see whether we can apply all what we have learned in the live chart pattern. Are we together? Today is Sunday, and I want us to analyze usdjpy with the information that we have learned, okay? With the information that we have learned, and see whether we can apply, okay? Knowledge is useless if you don't know how to apply it, okay? So how can we convert our knowledge so far that we have learned to apply it so that we can see whether we can print dollar? Are we together? So let's start. As you know, I am a swing trader, and being a swing trader, my macro time frame is either monthly or weekly. So let's go to monthly or weekly. We start with monthly. I will start with monthly. So this is the monthly time frame. And in my macro time frame, I don't spend a lot of time there. This is just because in the macro time frame, I only want to see the general direction of the market. This is USDJPY. So I want us to see in the macro time frame, in the monthly time frame, what is the general direction of the market? If we can begin from here, let me show you guys. If we can begin from here, you can see clearly that this market has been bullish. Okay, this market has been bullish. If you can see very well, if you can see clearly, this market has been bullish. Okay, and in our monthly time frame, we can now see what I was telling you, the inverse head and shoulder. Those are the setup. So if you see the inverse head and shoulder, the setup in the monthly time frame, guys, just know that that pair or that market will we shall buy for long term. Now that is what I'm calling the positional trader. That's how positional trader analyze the market. Okay, so in the monthly time frame, that's how we can see. That's just our macro or our external market structure. That's our external market structure. If you can see clearly, that is our external market structure. Can you see? Guys? That is our macro macro market structure. So the general direction, it has been bullish. So here, there's nothing else we are going to look. We know that now we shall be looking for buying opportunity. So let us draw. Let me delete this one. So let us draw our current support and resistance in the monthly time frame. Let us draw our current support and our current resistance in the monthly time frame. So our current resistance is here, the higher high kabisa. That is our current resistance. then our current support is at this point. It is at this point. That is our current support. Are we together? So, and you know my current, my support, I draw it with a blue line. So that is our current support and our current resistance in the monthly. Then our previous resistance, we shall draw a previous resistance. Our previous resistance, it is there. Our previous resistance is there. So simply in the monthly time frame, you can see the market never broke, or the sellers never broke our support. The sellers never broke our support, so we are still in bullish. Can you see here? So the bearish candle never broke this support here, and once there was a retracement, you can see the previous month, that was the month of October. We can see a lot of bullish buyers. Okay, we can see the bullish are now stronger here. So the only thing we are going to do, we are looking for buying opportunity in this market. Okay, we are looking for buying opportunity in this market. Are we together? So let us go to weekly. Let us go to weekly and see. In the weekly time frame, you can see very well these two are the previous resistance. These two are the previous resistance, and then the market broke it. The buyers broke the resistance and continued to forming a new higher high. Okay, so they use this resistance to be a support. They use this resistance to be a support. But unfortunately, now this is what I'm calling the fractal of market structure. The fractal of market structure. Now you can see, unfortunately, the sellers were able to break the previous support here, and the market now changed from being bullish in the weekly, changed from being bullish to bearish. Are we together? And form a new higher low, This was the new higher low. Okay, so let me zoom it so that we can see. So the market structure shifted from this point. Once this point was broken, okay, once the sellers were able to break this now support, the current support, okay, it continued to form a new higher low. Can you see a new higher low, guys? So the market continued to form a new higher low, and it reached to our monthly support. The moment the market reached to our monthly support, we can see now the presence of buyers are very strong. Okay, and they end up breaking what? They end up breaking this new resistance. So once the new resistance is broken, now we have shift the market. We have a change of character. So from bearish to bullish. So our weekly time frame has married with our monthly time frame. Our weekly time frame has married with our monthly time frame. If you can see very well, the market shifted from bearish to bullish from this point. Are you together? Are we together, guys? So we shall continue. Simply we shall continue to daily and see, did we shift from bearish to bullish? Okay, that's what I'm calling the fractal of market structure. As you continue to go down to the time frame, now you shall see so many details. And I will advise you, if you know how to marry the external market structure with the internal market structure, now we are going to be a profitable trader. So let us draw that previous resistance that was broken in the weekly. This is the previous resistance we had. This was the new higher low. Okay, after we shifted them in the weekly, after we shifted the market structure from bullish to bearish. So that was the resistance. Are we together? So once you know that once the resistance is broken upward, once buyers break the resistance upward, that resistance change from being resistance to be what? To be a support. Simply is like that. Forex is easy. Can you see? So once this resistance zone is broken upward, we shall use this once the price come back or retrace back. We are expecting buyers to have support here to buy. Are we together? Simply that is what we are looking for. Simply that is what we are looking for. Are we together, guys? So we shall change now from this red zone to be a blue zone. So we are expecting to see a support in this area. So and then I want you now to see what I explained to you yesterday. I know I made a promise that I'll be showing you how we are going to make how we are going to form a inverse head and shoulder, how we are going to form a double bottom, a double top. So I'll be showing you how we are going to form that. But today I want us to apply all the knowledge we have got so far into practice. Are we together? So that's how we are going to do. Today, that's what we are going to do. Sawa guys. So if you can see very clearly, the market at first, it formed a double, and not even a double, a triple bottom. Can you see this? This is leg number 1, leg number 2, the leg number 3. Are we together? So the market at first, it formed a triple bottom. And that's why now we have what? And that's why now we have a strong buy. Are we together? That's why we have a strong buy. So now, can you see we have a possible inverse head and shoulder here. We have a possible inverse head and shoulder. We have a possible head and shoulder, inverse head and shoulder. Why am I saying so? I know it may not be very clear. So we have this, the right shoulder. This is a possible head, and then we are yet to form what? We are yet to form a left shoulder. We are yet to form a left shoulder here. So this is what I'm calling a possible head and shoulder, inverse head and shoulder. If you never watched our previous yesterday video, please go and watch that video. I showed you clearly how we are going to trade this inverse head and shoulder. I showed you how we are going to trade the double bottom, the double top. Another thing I can see in the weekly time frame is the possible head and shoulder. So we have two things here the market can do. We have two possibilities the market can do. Okay, so possibility number 1, let us start with the head and shoulder. Can you see? This is the right shoulder. This is the right shoulder. We have two right shoulders. Are we together, guys? We have two right shoulder in the weekly. We have two right shoulder. Then we have our head. We have our head. Are we together, guys? We have our head. Now, what is the way forward? And then the price has reached in the area of forming what? Forming a left shoulder. So there are two possibilities. The market might come, form a left shoulder there, and then drop up to this point. That is possibility number 1. That is scenario number 1. The market might use this head and shoulder. This is the right shoulder, and then this is the right shoulder, and then this is our head, and then this is our head. Okay, this is our head. Now we are yet to form a left shoulder. So the market might use this region to form a left shoulder and then drop. That is scenario number 1. Are we together? Scenario number 2. Since we know in the macro time frame or in the monthly time frame, the market is bullish. Since we know the market is bullish, and this is the scenario I am in. This is what I want to see. I'm still bullish in this pair. So scenario number 2 is the market might drop to this point to form an inverse head and shoulder to complete. Can you see? This is the right shoulder. This is our inverse head, and then to form a left shoulder, before it rally upward. So those are the possibilities I can see. And then the last possibility I can see, simply the market may range. So that's how we are going to analyze. That's how we are forming ideas when you're analyzing the market. So the market may range at this point. The market may range, okay? So you must have the three possibilities and see, okay? So that's how you are going to analyze this market. Anytime you are entering or anytime you are opening your trading view, any pair, make sure you know the general direction of the market. Make sure you go to your higher time frame and see the general direction of the market. If you cannot see general direction of the market in your higher time frame, it is good or advisable not to trade that market. Are we together? So let us continue to daily. So in the weekly, we have seen three scenarios. We have seen possible head and shoulder, possible inverse head and shoulder, and the market mid-range. But I'm still bullish in this market. So I'm still favoring buyers. Okay, I want to see scenario whereby the inverse head and shoulder is formed so that we can do what? We can buy this market. Now, in the daily time frame, if you can see that we have so many internal break of structure, change of character. I might draw, but it will take time here to draw all this internal structure. So I want you to know, and if you understand about the fractal of market structure, it will be so easy. Okay, it will be so easy for you. If you understand it, it will be so easy for you. It will be so easy for you to analyze this market. Okay, so this is now the internal market structure. Remember, we have come from monthly time frame to weekly time frame. That is what I am calling top-down analysis. Okay, so simply this is what I'm drawing now is our internal market structure, and now you can see several market break of structure, change of character. You can see all of them now here. Now you can see all of them. Okay, so if you are using daily as your macro time frame, now you can see very clearly. If you are using daily as your macro time frame, this is how your internal structure is. The market was bullish here. Let me show you. The market was bullish at this point. You see, it was bullish, forming higher high, higher lows. At this point, the market broke, or we had a shift of market structure. This is what I'm calling internal shift of market structure, or internal reversal, or internal change of character. You see, this support was broken downward, okay, to form a higher high, a higher low. Now a higher low. The market continued to form it. This high was lower than this one. Okay, so the market continued forming a higher low, a higher lower, lower. Okay, so we continue to forming to continue with the bearish. You can see this high was lower than this one, and this low was lower than this one. Okay, so the market was bearish here, and then it broke this one to form a new higher low and a new lower low. Can you see? And then we had a shift of market structure here again, bullish. Shift of market structure, bullish. Are we together? Shift of market structure, bullish here. And if you can see clearly, we had what? We had an inverse head and shoulder. Clearly here. That's why I'm telling you, if you understand the fractal of market structure, and then you understand, and then you practice to see this setup. You practice to see the setup I'm showing you guys. You are now going to be a profitable trader. Are you together? Now, the market formed what? An inverse head and shoulder. Can you see? An inverse head and shoulder. It might not be clear the way I told you yesterday, but this is an inverse head and shoulder. Teach yourself to see this setup. Okay? So, the moment I saw this inverse head and shoulder here, and then this is our neckline. The moment the price broke the neckline, I went to 4-hour and 1 hour time frame, and the market retraced that neckline. We catch this setup, we catch this move from here up to here. I remember very well, and if you have never watched that video, go watch my analysis, USDJPY. I told you guys USDJPY, it will move up to 152. If you don't trust me, go watch that analysis. Go watch that analysis I made. Okay? Go watch that analysis. The moment I saw this, and you know how to trade this, I showed you. If you have not watched that video I analyzed in USDJPY, go watch that video, and I call that short from that point, and I told you guys that we are going to where? We are going to 152. We are going to 152. So now this daily is my macro time frame. Daily is my macro time frame. This is where now I'm watching careful to look for the setup. This is where now I'm watching careful to look for the setup. To look for the setup. Okay? So if you can remember that we say that in the weekly time frame, the market might use this point. In the weekly time frame, the market might use this point to form the head and shoulder. If you can remember, I've just in a previous minute, we just say the market may use this level to form what? To form the head and shoulder. Okay, this is the right shoulder. Our left shoulder is now here. And then the market might do what? The market might retrace or come back to this point. Are you together? That's what we said. That is scenario number 1. Scenario number 2, in the weekly time frame, we said again that the market might also use this setup to form what? To form inverse head and shoulder. Can you see? This is our left shoulder, possible left shoulder. This is our head. And now we are yet to form what? We are yet to form the possible left shoulder. We are yet to form the possible left shoulder. Are we together? Before the price rally up. Are we together? Before the price rally up. And then another scenario is the market might decide. The market might decide to do what? The market might decide to form a ranging market structure here. If it does like that, okay, we are not going to trade. We are only going to sell from this zone up to here. Then we are not going to trade this pair again, because if you know very well, I told you, in the ranging market structure, it's very hard as a swing trader to trade this market. Okay, it's very hard as a swing trader to trade this market. So in daily, guys, the current market structure, what do you see? What do you see in the daily, the current market structure? So we are going to zoom in and see. Let us draw that market structure. Now, whatever I'm going to draw, it will be our internal. It will be our internal market structure. Are we together? So remember, I drew the external from monthly, weekly. Now this is an internal market structure. If you're going to marry them together and to understand, now you're going to be a profitable trader. So let us continue. Let us continue, guys. So you can see very well. You can see the market was bearish. It formed a new lower high. Continue to form what? Continue to form a new lower high, lower low. Okay. So this was our the last high, the last lower high before the price. Before the price do what? Before the price broke it. So we shifted from being bearish to do what? To be bullish. Are we together? So this is the last lower high before the price did what? Before the price rally up and break it. Okay. So and remember, it was our red zone, and then we changed it to blue zone. Why? Because we are expecting, if the market will retrace back here, it will now form as a support and to put the market what? To put the market upward. Okay. So let us continue. So let me draw this. Let us start from here and draw so fast. Okay, let us start from there and draw it so fast. So if you can understand, it will be now easy to understand this. Okay, it will now be easy to understand this. If you understand how the fractal market structure works, it's now easy to understand. It's now easy to understand. So guys, that is our internal market structure. That is our internal market structure. That is how our internal market structure look like. That is how our internal market structure look like. Okay? That is how our internal market structure look like. So in the daily, we are now going now to focus on the current price action, where the price is, the price is here. And you can see now we have a lot of mixed reaction. The buyers are trying to come in hand, the sellers are trying to come in hand. Why? Ask yourself why. You have to know the reason why. Can you see the reason? The reason here, this price acted at this zone, it acted as a support, okay? Then it was broken down to be a resistance. And that is the reason why you are seeing a lot of mixed reaction here, okay? Reaction here, okay? So the market is still in indecision whether to go up fast or to come down fast, okay? Can you see there is a presence of sellers, presence of buyers? There is a lot of indecision. So you have to know why. Before you trade, before you place a sell position or buy position, you have to ask yourself why. What am I seeing? Why am I selling this pair? Why am I buying this pair? You have to understand, okay? If you go back, you can see it was a resistance. This zone, it was a resistance. This zone was a support. So this zone is very key. Even with a weekly time frame and monthly time frame, this zone is a key zone, okay? So let's now continue with our current price action. The price action is now here. If I can zoom in, the price action is now that mixed reaction, okay? So in daily, you can see that I can say clearly in daily the current price action is ranging. You can see the market is not going higher, the market is not breaking lower. Are we together? And in daily, this is now our current support. Are we together? In daily, this is our current support. Not this one. So you can see here. And then if you can go to 4-hour time frame, to see it clearly, now we are looking for two patterns. We are looking for the two scenarios, okay? I told you the market may use that zone to make a left shoulder for a head and shoulder, or it may use that pattern to drop. It may use this zone to bring this price action downward to form the left shoulder of the inverse head and shoulder. Okay guys, so we are looking for this zone. We are looking for two possibilities. As this zone. Are you together? The market may either go up or the market may come down. Now let's go to 4-hour time frame. Now you can see how I'm doing top-down analysis. Now you can see from the monthly time frame to now our 4-hour time frame up to our entry time frame. Okay, our entry time frame is at 1 hour. I usually enter my trade at 1 hour time frame. Now you can see now I will not go back in the history. Now I will be measuring on the current price action. And if you have practiced to see these patterns, you can now see clearly that what the market is trying to tell us. It is very clear. The market is trying to tell us he's trying to form what? He's trying to form a head and shoulder. Oh my God. If you can understand this thing, it will be clear you are going to make money easily. Do not let anyone con you. Do not let anyone scam you. This is a free information I'm telling you. I'm showing you, I'm giving you. Okay? So, let us draw the market was running up, it was upward, it was bullish. Can you see? The market was bullish. Okay, then this is our resistance there. The market broke the resistance. The market broke the resistance upward. Okay, and then instead of going up, instead of continuing to rally up, okay, it dropped down. It dropped down, and now can you see? This is the right shoulder. Our left, no, not left. This is the right shoulder. Our head, and now we are at a point of forming what? We are at a point of forming. We are at a point of forming the left shoulder. And if you can check very well, we have some resistance. We have some resistance. We have some resistance. We can see now we have some resistance. Now, if I've already seen that, now it is clear to me. The market want to use this zone to bring the price downward to our previous zone, to this zone. It is now clear to me. So I'll go ahead and place what? And place my, if you know the features or the characteristic of head and shoulder, you must have the right shoulder, the head, and the neck. So I'm going to look for the neck. That is our neck. If you can understand, if you can trace the neck correctly, that's now our neck. That is now our neck. Okay? That's now our neck. So the rule of this, our work is to observe patiently. Our work is to observe patiently. What are we going to observe? We are going to observe the several things. Number one, we are going to observe several things. Number one is, if the sellers will manage to break our neckline like that with a bearish candle, these are the red candle you see is what we are calling a bearish candle. With a bearish candle with a body like that, in now our 4-hour time frame like that, and then you can see a retracement up to that zone. We shall enter for a sell. We shall enter for a sell up to this zone, as a taking profit one, as our general taking, as our overall taking profit. Okay, as our overall profit. Now, another rule: the market should not break this shoulder. The market should not break this shoulder. Let me show you. The market should not break this zone with a bullish body candle. A bullish body candle is like this. Okay, so the market should not break this zone upward with a body. It should not do that. If it does like that, we are now going to do what? We are not going to trade this market. That's how I find my buyers, and that's how that's how I find my buyers, and that's how I set my rules. Are we together? If buyers will break this zone, I will not dare to even to look this market again, to analyze this market again. Why? Because it has already do what? It has already break my rules, my trading plan rules. Are we together? So I'm expecting the sellers will find momentum from this point, bring the price down, and then retrace. Another rule is, if we shall find if the sellers will find the momentum to come back down here, and then when they are retracing, when there will be retracement, we are not expecting to see buyers breaking this zone again with a body candle. If you see like that, we are going now to assume all these things, and we are just going to watch the market. Are we together? We are not going to trade this, because it has violated what? It has violated our trading plan. So the two things I'm watching, I'm really watching this market to break this neckline, okay, which is our current support, and then retrace. It is okay. They might take the liquidity upward here. I can see there is a liquidity upward here. It is okay. They might take that liquidity with a week. With a week. A week is this one. Okay? A week is this one. With a week, not a body. So they might try to take liquidity with a week, and then the market, and that candle should close below this support. Now we shall enter for sale. We shall now enter for sale to be guaranteed sure that we are dropping up to this point. Okay? We are dropping up to that point. Are you together, guys? That's how we analyze the market. That's how we analyze the market. That's now we are going to analyze this market. That's now we are going to form our buyers. Okay? If you are going to sell, or if you are going to buy. If you have any question, remember to comment down below, and to ask any question down below, and I'll be willing to help you. So how do we trade this head and shoulder? Our TP1 will be the half of this distance, below from this point. Let me show you the half of that distance. And now you know very well, I told you, maximize on your half, maximize on your TP1, because it is always a guarantee sure the price will go to our TP1. So if the price will obey those rules, okay, so our TP1 will be a half of this distance from the shoulder to the neck. That will be our TP1. Okay, from the shoulder to the neck, that will be our TP1. Maximize on this TP1. Maximize your profit on TP1. Okay, maximize your profit on TP1. And I told you why. So if you have not watched that video that I made yesterday, go watch that video, and you will learn a lot. Okay, guys, so maximize your profit on TP1. So that will be our TP1, and you can see very well the price. I'll be showing you the next video. I'll be showing you why am I saying maximize the profit on TP1. At the TP1, the price action, or this bigger institution may use the TP1 to form what? To form inverse head and shoulder. To form inverse head and shoulder, or to form what? To form a double bottom. So maximize on TP1. Maximize on TP1, because that is a guarantee sure. Are you together, guys? So maximize on TP1. Sorry, guys. Let me tell you the TP2. Our TP2 will be here. Our TP2 will be there, so that we can accomplish this pattern, this setup. So that we can accomplish the setup. So our TP2 will be there, the next half of it. And you can see very well, always the TP1 or TP2 always align. I'll be showing you very important candle as we continue the lessons. I'll be showing you some important candles to check. Okay, so you can see, so the price may drop to let me show you. This is just so the price may drop to come here to form a double bottom that will push this price upward. So maximize on this TP1. And TP2, you can see the hidden. There's a class, or there's a video I'm going to show you about the hidden candle. The hidden candle. The hidden candle. You can see there is a hidden candle here. And this candle is very powerful. This candle is very powerful. So there's a video I'm going to make as we continue the classes about the hidden candle. So the price may come and drop up to this TP2. And because we have a hidden candle in the 4-hour time frame, this zone, it may be used as a support to push the price up. So guys, follow me to learn more. And I'm sharing my experience on forex trading for free. So if the price manage to do that, we are going to aim how many pips? We are going to aim how many pips? Let me calculate the pips that we are going to aim. So let us know the total pips we are going to aim. Imagine guys, we are going to aim a total of 160 pips. 160 pips. 160 pips. So you shall take a half of it as a TP1, that is 80 pip, easy peasy, and then continue holding that trade up to getting a 160. So I'm expecting that. That's how we are going to analyze this market. And please put this this pair on your watching list, okay, so that this is a free signal. Actually, this is a free signal. I'm telling you, we are from our buyer. This is how we are analyzing the market. So if the price obey those rules, now we are taking our TP2 as 150, around 150 or 149. Are we together, guys? So keep on watching this video, keep on following this video, because I'm going to show you everything concerning forex trading. Otherwise, have a blessed weekend. Even as we are going to new week, I wish you all the best. Thank you, guys.